Money work. El mundo quiere dinero.
Welcome back to Money Talks. Today we're going to focus on the 5 myths you most commonly hear when it comes to life insurance. Myth number 5. I don't need life insurance. I have insurance on my job. That life insurance is not portable. So if you were to leave that job, then you would not be able to take that life insurance with you. What you need to have is a life insurance policy, one that is portable, and 2 that covers at least 5 to 10 times your salary. Most employer-sponsored life insurance policies usually cover up to a max about $250,000 on most cases on average. Myth number 4 is having life insurance and solely using it for the purposes of investing. For most people with life insurance, you want to use it for the purpose of taking care of those you leave behind or any debt that you may be leaving behind. There are better investment vehicles that you can use that typically earn you more money, say even your 401k at your job, that gives you tax deferral benefits and greater potential for growth, before you consider just having life insurance as an investment vehicle. Myth number 3 when it comes to life insurance is, I don't need it. I have savings set aside. This can be a little misleading. Unless you have enough savings set aside to cover all your debts, the money that you would want to leave behind for your dependents to cover them for the rest of their life, that would be enough savings set aside and you wouldn't need life insurance. But if you don't have this much set aside in savings, then you want to have a life insurance policy to cover the gap. Can having savings set aside reduce the amount of life insurance that you need? Absolutely. That's why you should run a life insurance needs analysis to make sure you're not overcovered, and also to check that you're not undercovered. Just having savings alone without a life insurance policy in most cases is not a solution. Savings mixed with a life insurance policy to cover the gap is a solution. Life insurance myth number 2, it's unaffordable. In many cases, life insurance is one of the few things that when you're younger, it's actually cheaper. So it's good to buy life insurance early so you pay less for it than by waiting, because every year you wait, every year you get older. Typically, you're still healthy, but you're getting older, so your life expectancy decreases. So you have life insurance price or premium increase. Life insurance is affordable. You do need to get a policy in a life insurance permanent or term that fits you. Life insurance can be as cheap as $20 a month, and some of you spend more than that on coffee. Just saying. And life insurance myth number 1 is, I don't need life insurance because I'm young and I don't have kids. You do need life insurance in the event you have debt that you could leave behind. If you were to unfortunately pass away, you need something to cover the debt. Maybe it's student loans that you have. Well, those debtors can choose to come after your family or your estate or any property that your family may be leaving you because they want their money and they have the right to go after your estate if they so choose. Even though you don't have any children, even though you're young, but you do have some debt that you owe, well, you want to have a life insurance policy that will cover that in the event of your untimely passing. The main thing I want you to take away is that whether you're young or you're old, you do need life insurance, or you need to have a plan in place to make sure that you do not need coverage. So get out there, run a needs analysis, figure out how much coverage you need, or figure out if you have too much coverage. Either way, start today.